After you have done your quantity statement, you can then look at your cost statement. And with the cost statements, this is where we start looking at all of the rand values. Okay, so first get the rand values of your opening work in process and then get the rand values of your current costs. So this is very simple. Everything comes directly from the question, guys. If we go back up to the question, here's the value of my opening work in process. Here's all of my current costs. Please just note, however, we combine our labor and our overhead costs in order to get conversion costs. So that is what you're seeing on the cost statement over here. Your conversion costs are made up of the labor and the overhead costs. Okay, but this is very simple, so I don't want to spend too much time here, guys. You're going to total the costs. So you total your opening work in process costs, you total your current costs, and you get all of your totals. And remember, we are using the weighted average method in this example. So with the weighted average method, we lump together all of our inventory and we work out an average cost per unit. So you'll remember even from direct and absorption costing, when we value inventory using the weighted average method, we include the value of opening work in process in our calculation because we lump everything together and we work out an average price. So add together all of your costs, your current costs and the cost of opening work in process because it's the weighted average method. Then bring the units that you've calculated down. So the units you worked out in your quantity statement, you bring those down. And what we're going to do is we are going to calculate a cost per unit. Because remember, I said to you, that is process costing. Process costing is as simple as taking the total cost for the period, dividing by the number of units, and because all of the products are exactly the same, we cost all of them at exactly the same price. We don't have to cost our products individually or separately. So that's what we're doing. Take your cost, divide by your units, get your cost per unit. So the cost statement is very simple. Further to that, the allocation statement isn't too bad. There's one or two things that's tricky, but it's not too bad. And this is the last statement that you need to be able to prepare. I take my units off my quantity statement. So under material, I've got 75,500 units that were completed. I'm going to multiply that by 6.53 Rand. I take the units under my conversion column. I multiply that by 8.36 Rand. So take the units, multiply it out by the cost, and we must make sure that when we're done, all of these units here have been ticked off. So all of the units are going to be multiplied out by the cost. And what we're doing is we're reconciling this cost over here, guys. So what you're going to see is if we look at our allocation statement, the total of our allocation statement ties back to this total here. So all we're doing on the allocation statement is we're saying that is the total cost, and how is that cost split? What's opening work in process? What's closing work in process? What's abnormal losses, etc.? What is the split of everything? Okay, so I said to you first, let's do the easy stuff first. For our completed units, just note, I said to you what you can do is you can take the units and multiply it out by the individual costs. But because the units are the same for both, you can also just say 75,500 times 14.89 Rand, the total. Okay, because both of them are exactly the same. So that's what I'm doing over here. Let's do everything else. We do the easy stuff first, then we get on to the difficult stuff. And the difficult stuff is the normal loss. So leave the normal loss for now. That's what's more difficult. My abnormal loss, I'm going to take my units, multiply it by the cost per unit. Take the units, multiply it by the cost per unit. Easy enough. That's how you get your abnormal loss. Closing work in process, units times cost per unit. Units times cost per unit. That's all I'm doing on this allocation statement over here. There's my abnormal loss. There's my closing work in process. So what I'm going to do to keep track of everything that I've highlighted, we've done those calculations. Okay. So which ones have we not done? This share of normal loss, share of normal loss, share of normal loss. We haven't done that. And that's because we've taken all of the units into account over here, but I told you to leave the normal loss units. Now remember from the beginning of our lecture, the normal loss must affect the value of inventory. So that's what we need to do now. We need to now increase our inventory cost to take the normal loss into account. Remember, it ends up increasing the inventory cost per unit because we need to take the normal loss into account. Okay, so what do we do with the normal loss? First, guys, we work out what the normal loss is. So again, we're just going to say the 9,500 units times 6 Rand 53, 3,800 units times 8 Rand 36. First, just work out what that normal loss actually is. Okay, so here's my calculation for material and for conversion. Calculate what the normal loss actually is. Then what we need to do is we need to allocate this normal loss to my completed units, my abnormal loss, and my closing work in process. Okay. So what do I need to do? I need to take this normal loss and I allocate it to my completed units, my abnormal loss, and my closing work in process. And after I've allocated it, my cost for everything is going to increase. You can see, even if you look, we haven't done the calculation yet, but as soon as I've allocated the normal loss to everything, my cost of my completed units, my abnormal loss, and my closing work in process, all three of those costs are going to increase. Why? Go right back to the first basic example that we looked at. Example 3. Go back to example 3. Remember, in this example, if we don't take normal losses into account, we value our inventory at 15 Rand each. That's if we ignore the normal loss. But in terms of IAS 2, we know that normal losses must be taken into account when we value our inventory. So what we end up valuing our inventory at in this example is 16 Rand 67 because the normal loss must be taken into account when we value our inventory. So we increase our inventory cost from 15 Rand to 16 Rand 67 to take the normal loss into account. And where does that normal loss end up sitting? That normal loss is sitting in my completed units because completed units are not being valued at 15 Rand, they're being valued at a higher price to cover the normal loss. Also, my abnormal loss is being valued at a higher amount to cover the normal loss. So it affects the value of everything. So that's why, guys, it's important in our calculation over here, when we now allocate this normal loss that we've worked out over here, we need to allocate it between the completed units, the abnormal loss, and the closing work in process, which results in all of our costs increasing because the normal loss affects the value of inventory. Okay, in our basic example, inventory isn't valued at 15 Rand anymore, it's valued at 16 Rand 67 after allocating the normal loss or taking the normal loss into account. Okay, so how are we going to now split it between these three things, guys? We are going to use the proportions off of our quantity statements. So again, you're going to go back to your quantity statement and you are going to see, here's my completed goods, there's my abnormal loss, there's my closing work in process. So there's my units. Ignore the conversion column for now. Let's just focus on material for now. So for material, 75,500 completed units, 2,500 abnormal loss, 7,500 closing work in process. We use those units. Look here. We are just looking at material. Ignore conversion. We use those units. Completed units, 75,500. Abnormal loss, 2,500. Closing work in process, 7,500. What is the total of those three? 75,500 plus 2,500 plus 7,500 gives me a total of 85,500. So guys, I know what my normal loss is for material. Look just above. What is the normal loss that we calculated for material? We've got a normal loss of 62,035. How do we apportion it between completed units, abnormal loss, and closing work in process? We use the units of our quantity statement to apportion it, and we split that cost between the three different categories that they need to be split. And if we go up to our allocation statement above over here, we've done those three calculations over there. Now all we need to do is exactly the same thing for conversion. So I know what was my normal loss for conversion. It was 31,768. And I need to apportion that between my completed units, my abnormal loss, and my closing work in process. And I do the apportionment based on the number of units. So if I go back, here's my units, 75,000, 1,000, and 4,500. 75,500, 1,000, 4,500. What is the total of those three? It gives me a total of 81,000. So how do I apportion this cost between the three different categories? I split it based on the units, and that is what gets allocated to each category. So if we go up, that's what I've allocated to each category. And we can then complete our statement. We add those two together. That gives me the total, gives me a total, gives me a total. Please note we will have a rounding difference because you must force this to balance, guys. That total cost on your allocation statement must tie back to the total cost over here from our cost statement. So if you have a difference, just force it to balance and you come back to the correct cost. Guys, and what we just looked at was the long method. So remember, I said to you, the long method can always be used. However, it took a long time. Okay, it's called the long method for a reason. So I did say to you also that we have a short method, but the short method can only be used where we meet certain criteria. So let's see what the criteria are and then see if we can do the short method for this question. Now, the criteria is that our closing work in process must have passed through the loss point. That's the only criteria. And in this example, if we look at my diagram over here, guys, remember, in this example, where's my closing work in process? It's 60% complete. Did it go through the loss point in this period? Remember, we said it did go through the loss point in this period because in this period, I took it from 0 to 60%. So it went through the loss point in this period. So because my closing work in process passed through the loss point in the current period, I am now allowed to use the short method. Okay, so that's the one thing that I want to highlight to you. The short method can only be used if closing work in process has passed through the loss point. So in this example, we can use the short method. One other thing that I also just want to emphasize that I started highlighting over here is please just note, when we were allocating the normal loss over here, you will remember I said to you, we were splitting this normal loss between completed units, abnormal loss, and closing work in process. Please just check. In this question, you must allocate the normal loss to closing work in process because closing work in process has been through the loss point. So because closing work in process goes through the loss point in the current period, they must be allocated some of the loss. However, if closing work in process has not been through the loss point in the current period, then we don't allocate any of the loss to closing work in process. Then, guys, we ignore closing work in process and we only apportion the loss between completed units and the abnormal loss. So that's what I'm talking about at the top over here. The closing work in process has been through the loss point, so therefore the normal loss must be allocated to closing work in process. If closing work in process had not been through the loss point, you should not allocate any of the normal loss to closing work in process. I said to you, everything we've looked at up until now has been the long method, and it can be used at all times. However, where we meet certain criteria, let's use the short method. We do meet the criteria because the criteria is closing work in process must go through the loss point. So in this example, because it has, we can use the short method. So how does the short method work? Firstly, let's start with our production statement. Again, we are going to need this diagram, so let's just tidy this diagram up a bit. Okay, so that's everything that we need for this diagram. So, input column is only ever two things going into my input column. I've got 8,000 units sitting in opening work in process, and I put another 87,000 units into production during the current period. Total the input column. Then, next step, output column must equal the input column. Then do the easy things over here. The easy things being the number of units that are completed in the period and the number of units that are sitting in closing work in process. Those are the easy calculations. Then do the normal loss calculation. Remember, with the normal loss calculation, I said start with these units over here. So start with the 95,000 and ask yourself, do I need to exclude opening work in process and do I need to exclude closing work in process? Remember, we did not need to exclude opening work in process because opening work in process is going to go through the loss point in the current period. So we don't need to exclude it. So 40% here was my loss point. Sorry, I lost that at some point. Right. So don't exclude opening work in process. The units go through the loss points in the current period. They must be included in the normal loss calculation. The same thing. The whole reason why we're allowed to use the short method is because closing work in process has been through the loss point. So because closing work in process goes through the loss point in the current period, do not exclude closing work in process from the calculation. When we calculate our normal loss, it's based on the total 95,000 times 10%. And my abnormal loss is just the balancing figure. Then if we complete our equivalent production, as a recap, remember I said to you, for current production or units completed and transferred during the current period, remember I said to you, we make an assumption, we start production and we complete production in this period. We assume we do 100% of all of the work in this period. So we allocate 100% to both columns. Now, we are using the short method. So, with the long method, what we needed to do is we needed to work out the number of units that sit in each column over here. However, with the short method, guys, and there's no logic behind it, but with the short method, we ignore those units over there. So you can see below, what is the difference between the long method and the short method? With the short method, we don't include the normal loss in the material and conversion columns. So you guys can see above, we don't include the normal loss in my material and conversion columns. With the long method we do, the short method we don't. And it's purely because we are taking a shortcut, but you're going to see how much easier it makes our calculation. Okay, we're purely taking a shortcut. However, we do need to do the calculation for the abnormal loss. So for the abnormal loss, remember, where do losses happen? 40% into production. However, all material is added before the loss point because all material is added at the beginning of the process. So 100% of my material goes through the loss point. However, conversion happens equally throughout the process. So by the time I get to the loss point, I've only done 40% of the conversion work. So I lose 40%, not 100%. The other 60% happens after the loss point. So in my calculation over there, you can see for material, it is 100%, and for conversion, it's 40%. For closing work in process, what did I do in this period? Closing work in process is 60% complete. So in this period, I did 60% of the work. In a future period, I'm going to have to do another 40% of the work. However, that is obviously in terms of conversion. I did 60% of the work in this period. In terms of material, I've already done 100% of the work because all of my material is added upfront at the beginning of the production process. Production quantity statement, where we only deal with quantities. Done. Let's look at our cost statement. With the cost statement, guys, remember, please, this was a very easy statement. You just brought all the costs forward from the question. So just bring in all of the costs from the question over here, please. It's the weighted average method of inventory valuation we are using. So all of the costs are included over here in our calculation. And what we do is we take the cost and we divide by the units that we calculated on our quantity statement so that we can get a cost per unit. Okay. Weighted average method, therefore, we include opening inventory in our calculation and we work out an average price for all of our inventory. Then what I want you to do over here, guys, is how is this cost per unit different when we are now looking at the short method? So if you go back to the long method, when we did the calculation for the long method, we valued our inventory for material at R6.53 and for conversion at R8.36. Now with the short method, you'll see our inventory is being valued at a higher amount. The inventory cost per unit is higher. And why is the inventory cost per unit higher? It already includes the normal loss. So the benefit that we have over here, guys, is this cost per unit we've calculated. Because we ignored these units over here, we ignored the units in my material and my conversion column for my normal loss. I ignored those units. So by ignoring those units, my units are lower, which is resulting in a higher cost per unit, which means this higher cost per unit already takes the normal loss into account. So the benefit, if the normal loss is already sitting in that inventory cost, we don't have to do the whole allocation of the normal loss. It's already been done. So all we need to do now on our allocation statement is we just take our units and we multiply out by our costs. So what we're going to do is we are going to say, both of these are 75,500. So 75,500, we are going to multiply that by 16 Rand per unit. That's my completed units. Okay. For my abnormal loss, 2,500 multiplied by 7.25 Rand and 1,000 multiplied by 8.75 Rand. For closing work in process, 7,500 multiplied by 7.25 Rand, 4,500 multiplied by 8.75 Rand. And you've done these calculations. You don't have to worry about allocating the normal loss because the inventory cost per unit is already higher, so it already includes the normal loss. And you guys can go back and you can compare. If you look at the value of our completed units over here, and you compare it to the completed units using the long method, the two of these two together, they are the same apart from rounding differences. So we do have rounding differences. Okay. We can compare the abnormal loss, this total over here, and we can also compare closing work in process. And you'll see with the long and the short methods, they are exactly the same apart from rounding differences. Okay, and much, much easier. So there's no reason why you would ever use the long method if you can use the short method. It's 100% accurate and it's just much easier. So what would we have done, guys, if closing stock had not yet been through the loss point? So if closing stock hadn't yet gone through the loss point, we can't use the short method. We would have to use the long method. So number one, we must use the long method. Number two, when we're doing the long method and we are doing the allocation of the normal loss, if closing work in process hasn't been through the loss point, you don't allocate any of the normal loss to closing work in process because it hasn't been through the loss point. So that's the extra thing there. So if closing stock hasn't gone through the loss point, you must use the long method and you don't allocate the normal loss to closing work in process. It will then only be shared between current production and your abnormal loss.